Ford just dropped a bombshell that no one saw coming, and it's shocking everyone. For over 100 years, Ford has been synonymous with power, innovation, and American ingenuity. But now, they're at a crossroads. Sales are down, electric vehicles are losing money, and their newest strategy has sparked outrage. The stakes have never been higher, and the ripple effects could change the automotive industry forever. What's this bold announcement? What's behind their struggles in the electric vehicle market? And most importantly, how will these changes affect the vehicles you rely on? Let's dive into the chaos and see what it all means for you. What's happening? Ford was once a name that symbolized America's industrial ingenuity. From the assembly lines of the Model T to the roar of the Mustang, Ford didn't just build cars, it built dreams. For decades, the company was untouchable, a titan in the automotive world that defined the very concept of mobility. Ford wasn't just selling vehicles, it was selling a lifestyle, a promise of freedom, and a sense of adventure. But, as with any giant, cracks started to appear. At first, they seemed insignificant. A missed trend here, a delayed model launch there. But over time, these small issues began to snowball. What had once been a company at the forefront of innovation now felt stuck in the past. Competitors like Tesla, with its sleek electric offerings, and Toyota, with its reliable hybrids, began to chip away at Ford's dominance. The automotive landscape was shifting, and Ford found itself on the wrong side of the change. Fast forward to today, and the situation has escalated to a full-blown crisis. Walk into a Ford dealership, and you'll see it for yourself. What was once a bustling showroom filled with eager buyers is now eerily quiet. Rows of shiny F-150s, Broncos, and Rangers sit untouched, gathering dust, a stark contrast to the days when these vehicles couldn't stay on the lot long enough. So, what happened? How did Ford go from being an icon of American innovation to a company struggling to move its inventory? The scale of the problem. The numbers don't lie, and for Ford, they paint a worrying picture. As of November 2024, over 563 brand new 2023 Ford trucks are still sitting on dealership lots. While this might not sound like much at first glance, these vehicles account for 2.5% of Ford's total truck inventory, an alarming statistic this late in the year. To make matters worse, the 2025 models, which should be the company's flagship offerings, are practically invisible. Out of over 200,000 new Ford trucks currently available in the United States, fewer than 1,000 are from the 2025 lineup. That's less than 0.5%. Contrast this with Ford's competitors, and the issue becomes even clearer. Chevrolet, for instance, has already transitioned over 50% of its inventory to the 2025 model year, with 2023 models now almost extinct. Even Ram, while not leading the pack, has managed to keep 2023 models to just 2% of its current stock. This puts Ford in a league of its own, and not in a good way. The implications of this overstock are staggering. Dealers are running out of space, with some resorting to parking unsold vehicles on grassy fields or secondary lots. And it's not just about logistics, it's about perception. When a potential buyer walks into a dealership and sees rows of unsold vehicles, it raises questions. Why aren't these cars selling? Is there something wrong with them? These doubts can quickly snowball, making it even harder to move inventory. So how did Ford end up here? The fallout lies in a combination of three root causes. Let me break it down for you. Leadership missteps. Ford's leadership decisions over the past few years have played a critical role in its current struggles. At the height of demand for vehicles like the Bronco and F-150, Ford capitalized on their popularity by raising MSRPs and, in some cases, allowing dealers to sell vehicles above MSRP. While this approach initially seemed like a smart financial move, it alienated buyers. The inflated prices created frustration, and when the market eventually cooled, the consequences became clear. Vehicles that were once considered must-haves turned into overpriced inventory that dealerships couldn't move. This pricing strategy also damaged customer trust. Buyers who paid premiums now face the reality that their vehicles have depreciated faster than expected, leaving them questioning their loyalty to the brand. Meanwhile, competitors like Chevrolet and Toyota have avoided such aggressive pricing, focusing instead on offering value, which has helped them maintain stronger customer bases. The result? Ford is left grappling with both unsold inventory and a tarnished reputation, and the leadership challenge extends beyond pricing strategies. The company's attempts to balance its legacy identity with the need to modernize have created mixed signals. On one hand, Ford is trying to preserve its traditional market, relying heavily on gas-powered trucks and SUVs. On the other, it's dabbling in the electric vehicle space without a clear, cohesive vision. This lack of clarity has left Ford struggling to compete in a rapidly changing industry where consumer preferences are evolving faster than ever. Broader market dynamics. The broader automotive market has shifted dramatically in recent years, and Ford's inability to adapt quickly has left it at a disadvantage. Electric vehicles and hybrids are no longer niche products. They are becoming the industry standard. Competitors like Tesla have set the benchmark for innovation, efficiency, and affordability, while traditional automakers like Toyota have mastered the hybrid game. Ford, however, has remained caught in the middle, attempting to protect its legacy while trying to carve a path forward. Take Ford's electric vehicle efforts, for instance. The Mustang Mach-E was a bold entry into the EV space, but it hasn't been enough to establish Ford as a leader. Meanwhile, Tesla continues to dominate the EV market, offering vehicles that are not only cutting edge but also profitable. A few other automakers have achieved. Ford's partial commitment to electrification has resulted in a muddled identity, with neither a full embrace of innovation nor a firm grip on its traditional strengths. The economic environment hasn't helped either. Rising interest rates and economic uncertainty have made buyers more cautious, especially when it comes to high-ticket purchases like cars. Ford's pricing strategies have clashed with this trend, making its vehicles harder to justify in a market where affordability and practicality are top priorities. As competitors push forward with more compelling options, Ford is struggling to keep pace with these evolving market dynamics. Outdated practices. One of Ford's most significant challenges lies within its internal operations. While the company's production lines have historically been a model of efficiency, they've failed to evolve with the times. In contrast, competitors like Tesla have redefined manufacturing by implementing advanced systems that streamline production and reduce costs. Even Toyota, with its lean manufacturing approach, has maintained a reputation for reliability and adaptability. Ford, however, has been slower to pivot, leaving it playing catch-up in an industry that demands agility. The lag in modernizing its practices has left Ford at a disadvantage, particularly as consumer preferences shift toward tech-driven, innovative vehicles. Buyers now expect features like advanced connectivity, superior fuel efficiency, and sleek designs, areas where Ford has struggled to keep up. For instance, the production delays that plagued the Mustang Mach-E revealed deeper inefficiencies within Ford's supply chain, impacting both its reputation and its ability to meet demand. These outdated systems have also compounded Ford's inventory issues, with over 563 new 2023 models still sitting on dealership lots as of late 2024. Ford's inability to adapt its production strategy to market demand has resulted in a costly overstock problem. As competitors successfully transition to newer models, Ford's reliance on older, less popular inventory further highlights the gap between its operational capabilities and market expectations. Ford's latest announcement. Amid this turmoil, Ford's CEO, Jim Farley, made a surprising move. The company announced plans to raise MSRPs for its 2025 models. Yes, you heard that right, raise prices. At a time when dealerships are struggling to move 2023 and 2024 inventory, Ford is betting that customers will be willing to pay even more for their newest offerings. This decision has sparked outrage among dealers and consumers alike. For dealers, it's a logistical nightmare. Many are already struggling to find space for unsold inventory, and now they're being asked to make room for higher-priced models that might not sell. For consumers, it's a bitter pill to swallow. With rising interest rates and economic uncertainty, financing a new vehicle is already a challenge. Adding a higher MSRP into the mix only makes it harder. But here's the twist. Ford is framing this move as a long-term strategy. According to Farley, the 2025 lineup will feature advanced technology, improved efficiency, and other innovations that justify the price increase. It's a bold gamble, one that could either solidify Ford's place as a leader in the industry or push the company further into crisis. And this is just the beginning. Ford's latest announcement isn't just about pricing, it's part of a larger strategy to redefine its place in the electric vehicle market. But can Ford's EV vision succeed where others have failed, or is the company setting itself up for an even bigger fall? The electric revolution stalls. Ford's electrification journey began with high hopes and bold promises. Models like the Mustang Mach-E and the F-150 Lightning were launched to signal the company's commitment to a greener future. Initially, these electric vehicles captured attention, with the F-150 Lightning becoming the best-selling electric truck in the United States in the year 2023. But the excitement was short-lived. The electric vehicle market has proven to be a challenging battlefield. Ford's electric vehicle division, known as Model E, reported staggering financial losses, $3.7 billion in the first 9 months of the year 2024 alone. Breaking it down, that equates to a loss of approximately $37,500 for every electric vehicle sold. This financial strain isn't unique to Ford, but it highlights the challenges legacy automakers face when competing against industry leaders like Tesla. Ford's electric vehicles are struggling to find their footing. The high price tags, including nearly $90,000 for a well-equipped F-150 Lightning, are proving to be significant barriers for potential buyers. Meanwhile, competitors like Tesla continue to dominate by offering innovative vehicles at more competitive prices. Ford's electric vehicle ambitions, while commendable, have placed it in a precarious position, forcing the company to reevaluate its strategies for the future. Too many vehicles, too few buyers. One of Ford's most pressing challenges in the electric vehicle space is market oversaturation. The company, like many others, has invested heavily in electric vehicle production, but the demand hasn't kept pace. As more electric vehicle models flood the market, automakers are finding themselves in a price war. Tesla has repeatedly lowered its prices, forcing competitors to follow suit. For companies like Ford, which are already operating on razor-thin profit margins, this price competition is unsustainable. Ford's flagship electric truck, the F-150 Lightning, has become a case study in the pitfalls of overproduction. Initially hailed as a game changer, the Lightning's production has been halted until early 2025 due to declining demand. Dealerships are turning down new shipments because they can't sell the vehicles already sitting on their lots. This overproduction has created a domino effect, with dealerships struggling to manage excess inventory and Ford scrambling to reassess its production strategies. Beyond pricing, the lack of charging infrastructure in rural and suburban areas, a stronghold for Ford's traditional truck buyers, remains a significant hurdle. Potential customers are wary of transitioning to electric vehicles when they cannot rely on convenient or accessible charging options. This infrastructure gap, combined with high prices and economic uncertainty, has slowed the adoption of electric vehicles in markets that are crucial for Ford's success. When bold bets backfire. The F-150 Lightning was meant to represent the future of Ford, a combination of its rugged, dependable image and the promise of electrification. Yet, its high price point and miscalculated demand have turned it into a symbol of the company's struggles. While the Lightning initially led electric truck sales in the year 2023, its momentum has faltered. Buyers balk at the nearly $90,000 price tag, even with its advanced features and capabilities. For many, the Lightning feels less like a revolutionary work truck and more like a luxury item, out of reach for the average consumer. The situation has forced Ford to take drastic measures. At its Rouge Electric Vehicle Center in Dearborn, Michigan, production has been paused and workforce adjustments are underway. Of the 2,100 employees at the plant, 1,400 are being reassigned or offered retirement packages. While Ford emphasizes that these are not layoffs, the voluntary retirement option signals deeper concerns about the viability of its electric vehicle production plans. The broader electric vehicle market is facing growing pains. While early adopters embraced models from Tesla and other brands, the mass market has been slower to follow. Buyers are increasingly prioritizing affordability and practicality, areas where Ford's electric vehicles struggle to compete. The question now is whether Ford can recalibrate its strategy in time to turn the tide, or whether its bold gamble on electrification will continue to strain its financial and operational stability. Why it matters to you. Ford's challenges in the electric vehicle market extend beyond the company itself. For consumers, these struggles impact everything from vehicle availability and pricing to the broader pace of electric vehicle adoption. The oversupply of electric vehicles has created a unique opportunity for buyers as automakers slash prices to clear inventory. But this short-term benefit for consumers comes at the expense of long-term stability for the industry. For potential electric vehicle buyers, the lack of infrastructure and high price points remain significant deterrents. vehicles. These challenges highlight the gap between the promise of electric vehicles and the reality of transitioning to greener transportation. As Ford grapples with these issues, the choices it makes could shape the future of electric vehicles in the United States, influencing not just what's available, but also how affordable and accessible these vehicles become. The stakes are high, not only for Ford, but for an industry undergoing one of the most significant transformations in its history. For now, Ford's struggle to balance innovation with practicality serves as a cautionary tale for both automakers and consumers navigating the electric vehicle revolution. Too many trucks, not enough buyers. Ford's legendary truck lineup, including the F-150 and Ranger, has long been the backbone of its success. Yet today, these icons are sitting idle on dealership lots across the country. Once the hallmark of American reliability, these vehicles are now emblematic of Ford's inventory crisis. Dealerships are slashing prices by as much as $10,000 on certain F-150 trims, with some models now available for under $50,000. While this might seem like a win for consumers, it signals deeper issues for Ford. The overstock problem is not limited to one model or region, it's a nationwide dilemma. Unsold 2023 models, particularly the F-150 and Bronco, are clogging dealership lots to the point where some dealers are parking vehicles on grassy fields. This surplus not only creates logistical nightmares, but also erodes the perceived value of Ford's vehicles. When customers see older models heavily discounted, it raises doubts about the brand's future direction and quality. These pricing cuts also put dealers in a bind. Offering massive discounts eats into profit margins, forcing dealerships to operate at unsustainable levels. Meanwhile, new 2025 models are expected to arrive with higher manufacturer-suggested retail prices, creating even greater tension between dealerships and corporate leadership. Ford's dealers are caught between trying to clear existing inventory and selling new, pricier models in a market where buyers are increasingly hesitant. Dealerships under pressure. Behind every shiny Ford truck is a dealership grappling with mounting pressures. Over the past year, major dealer groups have begun re-evaluating their relationships with Ford, a sign of broader dissatisfaction. AutoNation Incorporated, one of the largest dealership networks in the United States, recently sold 8 locations, 5 of which were Ford franchises. This move wasn't just about profit, it reflected waning confidence in Ford's ability to support its dealers. Dealerships are the front lines of Ford's operations, connecting the company directly to customers. When dealers struggle, it creates ripple effects throughout the brand. The problem lies not only in the inventory glut, but also in the strained relationship between dealers and Ford's leadership. Many dealers feel unsupported, especially as they juggle excess inventory with the challenge of selling higher-priced new models in a cautious economy. The consequences of these strained relationships are already becoming evident. As dealerships reduce their investment in Ford, the company risks losing valuable touchpoints with customers. A shrinking dealer network means fewer opportunities for buyers to experience Ford's vehicles firsthand, further hampering the company's ability to recover. If Ford cannot rebuild trust with its dealers, it may face an even steeper uphill battle to regain its market position. The customer disconnect. While Ford's inventory and dealer issues are pressing, the root of the problem lies in its disconnect with customers. Rising interest rates and economic uncertainty have made buyers more cautious than ever. For many, the idea of financing a new vehicle, especially one with a steep price tag, is simply out of reach. Ford's decision to raise manufacturer-suggested retail prices for its 2025 models only adds to the burden, alienating customers who might otherwise consider its lineup. The perception of Ford's vehicles has also taken a hit. Models like the Bronco, once considered a must-have, now symbolize the company's overreach. When the Bronco made its triumphant return, buyers lined up to pay above retail price. But the dynamic has shifted. With rows of unsold Broncos now sitting on dealership lots, customers are no longer willing to pay a premium. Even generous discounts of up to $7,600 leave the Bronco Badlands, for example, at a steep $62,900, a price that feels excessive in today's market. Ford's struggles aren't just about pricing, they're about trust. Customers are questioning whether Ford can deliver the value and reliability they expect. Recalls, pricing missteps, and a lack of clear innovation have created a perception problem that Ford must address to stay competitive. For the average buyer, this disconnect has turned what was once an aspirational brand into one that feels increasingly out of touch. These challenges impact more than just Ford. They affect the broader automotive market and consumer experience. As Ford struggles ripple through dealerships, buyers may see fewer promotions, reduced inventory options, and changing dynamics in how vehicles are sold. Additionally, rising prices could set new benchmarks across the industry, making affordability a growing concern. For loyal Ford customers, the question is whether the brand can regain its footing and deliver the value, innovation, and reliability that have defined it for generations. Ford's next moves will determine not only its future, but also how the automotive landscape evolves in an increasingly competitive and uncertain market. The hybrid solution. As Ford navigates the challenges of an evolving automotive market, hybrids may emerge as its most promising lifeline. While electric vehicles have captured headlines, hybrids offer a practical compromise for customers hesitant to go fully electric. Ford's Maverick Hybrid is a shining example. With a starting price under $35,000 and impressive fuel efficiency, the Maverick has managed to maintain steady demand, even as other models struggle. Hybrids could be the key to bridging the gap between Ford's traditional lineup and its electrified future. By offering vehicles that provide better mileage without requiring a full shift to electric infrastructure, Ford can appeal to a broader audience. This strategy also plays to Ford's strengths, allowing the company to maintain its rugged, utility-driven image while incorporating modern technology. Expanding its hybrid lineup could help Ford stabilize its financial footing and regain consumer trust. While hybrids may not generate the same buzz as fully electric vehicles, they address a real market need: affordability and practicality in uncertain economic times. Streamlining operations. Ford's operational inefficiencies have been a recurring issue, but the company is taking steps to address them. Quality problems, including high recall rates, have eroded consumer confidence. To combat this, Ford recently appointed a new head of quality to oversee improvements in production and reduce warranty costs. These changes are critical for ensuring that new models meet consumer expectations and avoid the costly recalls that have plagued Ford in recent years. Additionally, Ford is investing heavily in manufacturing capabilities. Through its joint venture, Blue Oval SK, the company secured a $9,630 million loan to enhance its electric vehicle battery production. While this move supports Ford's long-term electrification goals, it also signals a commitment to building a more efficient supply chain. Improved operational practices could help Ford manage inventory better, prevent overproduction, and align production levels with market demand. These steps are essential for ensuring that Ford can compete in an industry that values efficiency as much as innovation. Rebuilding trust. Perhaps the most significant challenge Ford faces is rebuilding trust with dealers, customers, and investors. This requires more than just addressing operational issues. It demands a clear, cohesive vision for the future. Ford's Ford Plus strategy, which focuses on electric vehicles, commercial models, and connected services, is a step in the right direction. However, the company must deliver on its promises to regain credibility. One way Ford can achieve this is by fostering stronger relationships with its dealers, providing better support, addressing concerns about inventory and pricing, and creating more transparent communication channels will be crucial. For customers, Ford needs to focus on affordability and reliability, ensuring that its vehicles deliver value without sacrificing quality. For investors, Ford's ability to stabilize its financial performance will be key. The company's efforts to cut costs, improve efficiency, and expand its hybrid offerings could provide the foundation for long-term growth. However, Ford must also demonstrate that it can adapt to market trends and innovate in ways that resonate with consumers. The road ahead. Ford's journey is far from over. The company's challenges, from inventory woes to electric vehicle struggles, reflect the broader transformation of the automotive industry. Yet Ford's legacy as a pioneer of innovation gives it a unique opportunity to adapt and lead in this new era. The choices Ford makes now will determine not only its future, but also the direction of the automotive market as a whole. Will it fully embrace the hybrid and electric revolution? Can it rebuild trust with its dealers and customers? And most importantly, can it reclaim its place as an icon of American ingenuity? What do you think about Ford's latest moves? Are hybrids the solution, or should Ford double down on electric vehicles? We'd love to hear your thoughts. Let us know in the comments section below. If you enjoyed this deep dive into Ford's challenges and future, make sure to like this video, subscribe to our channel, and hit the notification bell to stay updated. While you're here, check out our other videos for more insights into the automotive world. Thanks for watching.